Good morning, treasurers. This is your host, Partha Shah, co-founder of Net FinTech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 2nd August 2021. In the international market, the Personal Consumption Expenditure Index, which is Fed's preferred measure of inflation, increased 3.5% in June year-on-year versus economists' expectation of 3.6% jump. US 10-year closed at 124 and 30-year at 189 on Friday. Interesting fact, did you know that the IMF, the International Monetary Fund, warned last week that there is a risk inflation will prove to be more than just transitory, pushing central banks to take preemptive actions. So we still have a fear and a warning from IMF, whereas the central banks are across the world are having the same word. It's a transitory information. The central banks across India, US, Germany, Britain, Japan, everyone is saying the same thing, transitory inflation, whereas the fund managers and the IMF are against and not buying that argument. In the crude oil market, crude is at 74.27, short-term range for crude is 73 to 77. In the currency market, dollar index is at 92.17. Today's range for dollar index seems to be at 91.96. 92.45 market will be range bound for dollar index. USD CNY Chinese yuan at 647. USD INR with a high of 74.44 closed at 74.42. Support for USD INR seems at 74.30 and resistance at 74.55 for now. A close near day's high and a failure to close below 74.30 for 2 consecutive days reconfirmed the RBI intervention and rupee weakness. Trading idea for USD INR. A USD INR is supposed to be range bound today with no clear signals. 74.30 has been defended by RBI once again and fundamentals pushing for 75, but not so soon. So the market will be range bound. Please trade according to the trading ranges. In the domestic market, 30th July 2021's Friday's GSEC auction gave subtle hints for the investors' appetite. So let's try to decode Friday's GSEC auction. 563 2026 cutoff was at 574, but only rupees 3,535 crores were accepted and rupees 7,465 were devolved on PDs. GOI FRB 2033 at 474, green shoe was exercised for additional 1,000 crore. 664 2035 cutoff at 684, green shoe was exercised for additional rupees 2,000 crores. What do we infer from this Friday's GSEC auction? RBI is not comfortable for a 5-year above 575. Hence, they give a cutoff at 574. This also means for the last 3 times out of 4, there is a devolvement in 5-year maturity. Because of the devolvement on PDs, we could see PDs selling rupees 3,829 crores on Friday itself. Others and MFs were net buyers on Friday, taking the pain away from the market. The illiquid securities in GSEP 2.0 have helped banks to offload their illiquid papers from their HTM. This has made room for long maturity papers in the HTM portfolio, and that is clearly seen with 664 GS 2035 demand, where rupees 12,000 crore were borrowed at 684. A good thing for a longer maturity for RBI. Watch out, 664 2035 has reached an informal cap of rupees 1.2 lakh crore issuance. This paper may become illiquid very soon, and we may see maximum one or none auctions for 664 2035 going forward. Based on the GSEC auctions outcomes, 563 2026 closed at 572 versus 572 the previous trading day. 664 2035 closed at 681 versus 683 the previous trading day. Trading strategy in GSEC: 610 2031 trading at 620, hold on till MPC, do not try to average or double down. Based on Friday's auction results, 664 2035 will see some more buying, and additional 10 paisa gain is to be made. 563 2026, stay away from it for now. Continue to hold, but do not average out. Trading range for 610 2031 seems to be 617 to 623. There exists a good support at 623, beyond which there would be a chaos. That's it for today. You were listening to Night Snippets with Partha Shah, co-founder of Night FinTech. See you tomorrow with the new episode of Night Snippets.